we got to do something bigger, right? All right, let's do a fund. All the big guys do funds. Like, let's do a fund. Well, how do you do that? I have no idea how to do that. I'm like, it can't be that much different than a syndication, right? And all this stuff goes through my head, the legal and all the other bullshit. And I'm like, you know what? Let's just do it. We're going to do it. We're going to do a $20 million fund. And so I just started down that path. I got with the attorney. We started raising money. And first guy writes $1 million check. Second guy writes a $3 million check. I'm like, oh, damn, this is actually easier because people write bigger checks versus doing like a syndication.
Welcome to the Path to Passive podcast, where we talk about building wealth and empowering lifestyle through commercial real estate investing for tech professionals. I always wish that other tech professionals reaching financial freedom had documented their journey along the way, so I'm doing it for the rest of us. Join us as we explore stories, many failures, and lessons learned along the way. I hope you enjoy and subscribe. Derek Vickers, welcome to the show. Dude, over 2,000 units, mobile home parks, over 40 plus communities. And the latest stat I was seeing is over 130 million assets, which I think has probably gone up by now too, right? That is really cool to learn about you and your journey going from selling insurance and all the way to getting exposed to real estate, learning about the underwriting and taking meetings, making calls between your other meetings still at your day job to break into mobile home park investing and ultimately to where you are now. Excited to have you here. I've got a bunch of questions. I think you have a lot of valuable insights to share with the audience too. But in your words, would you mind introducing yourself for the listeners, Derek?
Yeah. Hey, Steven, thanks for having me on. And I'm excited to be here. I mean, look, I'm a simple guy. I grew up in a small town. No one in my family was wealthy. Their definition of working hard was like digging a ditch. And that was hard work. During the summers, I worked with my grandfather. He had a small, tiny general contracting business. So I'm a worker, right? And I'm persistent. I didn't grow up learning about wealth building or anything like that. So I've taken somewhat of a lack of, I don't want to say lack of intelligence, but lack of that know-how until later in life and just figured out how to work hard and be super persistent. And that's who I am. I'm just very persistent and I like expanding and I like growth. So those are my two things, how I would describe myself, I say. So
yeah. You got exposed to the real estate investment when one of your friends asked you to invest in his deal, right? That was one of the first things. Walk us through really what was that start for you?
yeah, well, so take it back before that is that I learned real estate from Grant Cardone. I'm sure everybody knows who he is. I learned how to underwrite multifamily and I learned how to like, oh, wow, that's how these guys that have large net worths, they do that. They buy real estate. Like other people do it different ways, but that's one way. And it made sense because people need a place to live and like you pay rent, right? It's pretty simple business,
Yep.
right?
Simple.
And so I like that and kind of analyzed it and underwrote deals for a while. Actually, I could do back of the napkin math pretty quickly. It just made sense to me. And I don't think just the general aspect of real estate calculation, it just made sense. I don't know why. Maybe I'm just analytical. Rod Khleif told me I'm an analytical guy. I was on his podcast and he's like, dude, you're just analytical. Like you analyzed for 5 years. And I'm like, well, I never thought of it like that, but I am. And it was about 2020. You probably heard the story. I think it was it was right after COVID happened. And I was like, man, I had maybe a 50 grand and I wanted to invest. I asked my buddy who had invested in mobile home parks if I could invest with him. And he essentially told me I didn't have enough money. So I'm like, I'm like, all right, dude, the sports guy. I mean, he's like, all right, dude, I'm just going to go buy them myself. Screw you, man.
Nice.
Right.
Yeah.
And so basically I had found a list and started cold calling, just taking action.
You're putting into practice what you learned too.
Yeah, just taking action. Like I've been good at that. Like the insurance business, it like forced me to get good at that because if you don't take action, you don't make any money. So it was just like, hey, I don't know how I'm going to buy it. I don't know what to say when I'm on the phone, but I can handle rejection. So whatever, I'm just going to call and see what happens, right?
I'm kind of curious what lessons, learning in that environment, I only have a small picture of what that would be like to be on Grant's team and what you learned there, but you're obviously underwriting deals and you could do the not only back of the napkin math, but more complicated, quote unquote, analytical math too. What were some of the things that you had in your mind that you took from the Grant environment? Just kind of curious. I mean, I think of things like Who's Got My Money as an example.
Well, I didn't work for him. I basically I watched, he used to have this show. It was Real Estate Mondays. He did a podcast every Monday where he would
Mhm.
just look at deals and people would call him with deals and they would underwrite deals. But
Mm,
I was actually at Grant's house a couple of weeks ago. So I
cool.
know Grant. And he actually just taught me to, hey, man, like the reason why you're struggling in the sales business was like you're just not taking enough action. Right. And that
Mhm.
was easy for me to understand. I'm like, okay, yeah, that makes a lot of sense. Like, I'm just not doing enough. Like, I'm underestimating the effort that it actually
Mhm.
took to get where I wanted to be because I had never been where I wanted to be before. So, how would I even know? Right.
Right.
So, it was like
Yeah.
him actually being like and making me understand the amount of the estimation of effort required to get something done. A lot of people actually underestimate the effort. So, when they take the action and it's hard, they're like, oh my God, like, this is too much. Well, you just underestimated what it would take because you haven't been there yet. So you don't know.
Absolutely. The amount of reps and et cetera that would take. I'm sort of curious on this one because I think this is such a good topic too. And I know it seems foundational and so basic to you here, but I think it's a great thing to expand on. How many magnitudes more of effort was it for you as an example? And I know it's going to be different for everyone, but I wanted to poke on this one, especially because engineers, tech, et cetera, we're used to like writing once code, getting that product good, and then scaling. You know what I mean? You could deploy to a lot of things, that example. Of course, there's iterations, but you're talking about reps, right? Reps and that volume too. So I'm curious if you could expand on how much more magnitude it actually
Yeah. So
was.
it was a lot because back then, if we are just talking about in the insurance business, I was doing like maybe 15 calls a day. These are in person calls, 10 or 15 calls a day. These are in person, the businesses. They're tough. Like they're tough cold calls to
Yeah.
make. And so I actually started using the phone where I could call more people. So maybe I was calling 30, 50, maybe 100 sometimes a day or more. But then I hired other people to start calling for me too. So,
Nice.
Grant was always like
You
10x.
scaled.
And so I was like, okay, I'll just do 10x, but I can't do that. I can't make that many calls. So I got to bring someone else in to do it. And that's the whole point of that
Yeah.
concept, right? It just gets you thinking differently because I was like, oh, wow. So now I need to hire people. I wouldn't have freaking thought about that before. And so that's like the
Mhm.
magnitude was it started to scale as I hired people to make calls for me. And when you're like, okay, well, if this will actually get me to my goal, then I don't care if I have to pay the guy because it doesn't matter.
Mhm.
Right. And so it's just
Yep.
flipped my thinking around. And I still apply
Got it.
that rule today. Right. It's like we're always trying to scale activity because it's really about outflow and what you put out calls, mailers, texts, whatever. If I do
Mhm.
100 or 1,000 of those a week in any way, shape, or form, and somebody else does 100, I'm going to
You're gonna
win
win,
every time.
right?
And I can do that. Like
The inputs
that,
are there.
that made sense to me because I'm like, okay, sheer effort. I'm good at that, dude. I can run. I'm good at like long distance running. I work out a lot, like CrossFit, like tough shit. So me, it's just okay. If I just got to stay in there longer, I can win at that. That's something I can win at. I'm not super smart like the Wall Street guys, but I can stay in there and handle pain. That's for sure.
And you've certainly scaled from, that point up to these 40 plus mobile home parks. So the inputs and outputs equation obviously makes sense. There's some kind of average there too, but still just taking a lot of action and getting things moving really, of course, pays
Yeah,
off.
and I just want to
So
say something else on that, Steven. It's like it's at some point you're going against this thing, right? When you're taking action, where you're just like it's like banging against you, like it's pushing back, the universe or whatever the hell you want to call it, whatever you want to call it.
yeah,
It's actually trying to make you fail, right? So if you go into it with that viewpoint that it's like trying to make you fail, then you're like, okay, good. It's supposed to do this. It's like this is supposed to
right.
happen. But if you keep hitting it and going, at some point it flips because now our acquisitions on getting deals, it's just like it rolls now. We get deal flow from various places. If I perceive that our deal flow, I'm like, okay, like I can perceive that it's backing off a little bit, or I don't see enough deals in the pipeline. I just like, boom, all my resources. I tap the resources and it starts moving again. Right.
When did you start to notice that traction? there's obviously, 1, 2, 5, 10, 15
15 what?
mobile home parks.
Well,
Mobile home
well,
parks.
so yeah, I would say it like flips before, and then at some point you don't realize it because like when I'm still using
Right.
brute force and finding these deals,
Mhm.
right? It's still rough, like it's still work, but I'm finding a lot of deals. But I started doing the podcast, which is communication out, just a
Mhm.
call, just like a text. I started doing more social media, so it's even more stuff going out. And then at some point it
Mhm.
flipped. I don't know exactly when it was. Maybe a
Right.
couple of years ago, but it flipped to where it was just okay. I have this thing going, this plate spinning now. I would have to completely screw it up to get it to stop spinning.
Yeah. And so you're talking about specifically in this case, and of course it applies to other places too, but here you're talking about the deal flow as an
Correct.
example,
Correct.
right? Okay. And with that also comes investors as well, because you obviously need capital. And we were talking about this too, right before we started recording, of wanting to go to bigger and bigger deals as well. And I want to talk about that because when getting the first park, you had to learn a lot of stuff, including things like systems, not only syndications, but going into funds, right? And so you've talked about things like bookkeeping and accounting, making sure you have those systems as well, and making sure rents are coming in, all those types of things. Similar to thinking about how going from these different levels, when the model you had before kind of breaks, right? You have to think of something new. When did you start doing syndications and going to funds instead?
Yeah, so we actually just started going to funds. So in the beginning, like it was a JV deal. I got brought in as the sweat equity guy. So it was two other
Mhm.
guys' money, and then I just did the work. And then we started
Mhm.
doing syndications after that because I kept finding good deals. And then I had a partner at that time who was kind of doing the structures of the syndications. We bought a bunch of parks together. And then he went to buy other stuff. And then I wanted to keep doing mobile home parks. So I raised some capital in those deals, but it was mostly his relationships. And I was still just
Mhm.
operating the things. I was like, we were crushing it. And then I had to shift. I'm like, okay, now I got to start doing the capital, right? And so I got to start raising the capital and doing the syndications. Luckily, this was like this guy, still a great friend of mine, super smart dude. He taught me how to structure a syndication. So I knew how to do that. I knew how to do the PPM, the OA. Like some guys out there don't even know what a PPM is. I hate to say it, but I've talked to guys like, oh, really? With a PPM, what's that? Well, it actually protects you, man. So, anyways, I learned how to do that right. And I learned the operations and learned what not to do there. Acquisitions was just like, I'm just good at that. That's fine. And so I had to figure out the capital raising thing. And again,
Mhm.
like I just got good like at just doing okay, I have an idea. I may think about it for a little bit, but my thinking time is less than most people. Most people will think on it. I'm just like, okay, got it. I don't know how I'm going to do this, right? But step one
Right.
is this. Okay, let's do it. Just like this past in 2025 when we started the fund, I was in my kitchen at my house one night and I'm like, God, how do we start? We got to do something bigger. Yeah.
Scaling.
And I'm like, all right, let's do a fund. All the big guys do funds. Let's do a fund. Well, how do you do that? I have no idea how to do that. I'm like, it can't be that much different than a syndication. And all
Mhm.
this stuff goes through my head, the legal and all the other bullshit. And I'm like, you know what? Let's just do it. We're going to do it. We're going to do a $20 million fund. Don't know how I'm going to do it. Don't know how I'm going to raise that kind of money to do it. We're going to do it. And so I just started down that path. I got with the attorney. We set all that up. And before you know it, we started raising money. And first guy writes $1 million check. Second guy writes a $3 million check. I'm like, oh, damn, this is actually easier because people write bigger checks
Mm.
versus doing like a syndication. Yeah, I mean, we just started and we had deals under contract and we started buying them. And it's just crazy like how powerful we are is that, hey, I'm going to do this, right? This is me now. I'm this new person that's a fund manager. That's the first step.
Mhm.
You have to be that. Then you do. And then bang, we're about to close the fund. Boom, I have the fund. Now I have to go back and recreate again. I have to say next goal. And then
You're talking about identity, as in we are so powerful. You're talking about identity
I
there.
guess, yeah, whatever you want to call it. Yeah,
Sure.
whatever you want to call it. But the fact that you can do that is pretty powerful stuff. But just people let their own shit get in their own way to doing that.
And so you're really talking about is decision and
Pretty much.
decision commitment and just have the action to
Yeah.
follow.
Yeah, exactly.
So was it the same kind of, I'm not trying to totally reverse engineer. It's just a question, not too much thinking on this, but it's just a question of, is this something that you also had to grow into with getting the reps in as well on the decision and commitment muscle, right? Everything seems like it's a muscle. And so the reason why I asked that and frame it is because when you were first started to raise capital, did it feel any different? Did you have any hesitation about going to ask people for their money and capital, or was it also just that skill, those reps, and just like you're talking about fitness and CrossFit, et cetera, and just like making the calls and just like these other things?
No, well, so the capital raising was a little bit different because it is reps, right? I got a bunch of reps in the insurance business. Like I did well in that business eventually. I started out and I sucked, but I didn't believe in the product that much. I owned the product, I bought the product, but it was just like
Mm-hmm.
I didn't really believe in it that much. I didn't
Yeah.
love it. And then when I did the mobile home park deals, I found out that, man, this business model works. I can make it work and it's successful if I buy the right deals. And so I knew that for sure. So me like reaching out to people, and I had built up this knowledge of, hey, it's not necessarily like about people saying yes. It's about how much reach am I doing? And so the more reach I
Mm-hmm.
do, I just don't have any emotion on it. If I'm like, oh my God, I'm going to reach out to Steven and I got to get this 500 grand from him, I have to. That is not the
Right.
right like emotional state to be in when you're calling. So I'm calling Steven. It's just a rep. Boom. Calling this guy. Hey, are you going to come into the? No. Okay, great. Hey, guy, are you going to come into the fund? Okay, great. You see what I'm saying? It's just reps because I know it's going to
Yep.
come in if I keep doing that. I just don't know where specifically. Now I can project it, but I just think that's important to know. Even if you reach out to a guy that, look, it's better to reach out to qualified people, but I even think that there's something about reaching out to people that you may not know if they're qualified or may not necessarily to be qualified, but it's still a reach, right?
Mm-hmm. Yeah. So also it's not putting, like you're saying, too much meaning on something, but also it seems like putting the focus on the effort, right? The focus on the thing completed as an example, not to overanalyze, but the thing completed is the call, right? No matter how that goes, the thing completed is the call. It's the weight moved, is it not what it meant to move the
Yeah.
weight?
Yeah. And what I've learned here recently and gotten even and honed my own skills on is, hey, okay, I'm calling Steven.
Mm-hmm.
Steven and I talked before or whatnot. Like he told me maybe. I don't want maybes, right? I want to call Steven with a clear purpose. Hey, Steven, are you investing or are you not? Now, I might not say
Right.
it like that. It's going to be different, but I want to have a direct question where, hey, Steven, we talked before. You mentioned you were looking to make an allocation of 250 grand. We're closing the fund in
Mm-hmm.
3 weeks. Are you in or not? Like then you get into
Yeah.
communication with the guy at that point, right? But sometimes you
Yeah.
got to have the balls to do that. But it's actually not that big of a deal because people would actually rather you be more direct than beat around the bush. Hey, man, you going to invest or not? We're closing the fund. No, I'm not. Okay, great. Keep you on the list for fund too.
Cool.
Or yeah, you're coming in.
Right.
Okay, when can we expect that to come in? Right?
Right.
It's just, you have to
Just
call
clear
with direct
communication.
intention too, is what I'm saying. What do I want to get out of this call? Am I going to call this guy and dick around and talk to him about the NBA game last night? No, I'm calling Steven to say, hey, I want to get 250 grand from him. I know it's a great deal. I know it's a great investment. Like it's an inflation hedge, like all this good stuff. Are you going to invest or not?
Mm-hmm.
Kind of thing.
Yep.
So I think that's important on the reps too, because you can make reps and it'll still work. But if you make intentional reps,
Mm-hmm.
it's even better.
Well, yeah, right. You got to know what you want out of it. And I think the other point of that is I'm going to ask this question. I feel like it's kind of a dumb question, but I'm still going to put it out there. Is that everyone, you're obviously going to make an offer and that's going to benefit who the investor is too. The question is, do you ever feel concerned about coming off as rude by being too direct? And the question, I could immediately think, so what if they think you're rude? You're there and you're providing service and you also want to do deals with friends as an example, right? And so the more that you do together, the better friend that you might be as an example. And so these are just some of the thoughts in this situation. So I'll go back to that question is, do you ever feel like you've come off rude by being too direct?
So do I worry about that? Yeah, absolutely. I don't want to, I don't want to come off as just being like a complete prick. And that's not the thing. It's all in how it's delivered, right? It's
Yeah.
in the delivery of it. If you're good at communication, you know how to talk to people, you can sense and perceive what's going on. Hey, Steven, I know we
Mm-hmm.
talked before, talked about doing an allocation of 250. Are you coming in or are you not? Because we're closing the fund in 3 weeks. It's
Cool.
not like it's a direct, okay, are you doing this or not? But it's not like, you're not being an ass about it. Because some people can. I've been on calls with people and they're like super, super direct. I'm like, dude, it's kind of, it's just,
It's kind of a little gross. It's a little bit too
yeah,
transactional,
exactly,
right?
exactly. And that's not me. And like, I have that fear. Like, I don't want people to think this is probably a flaw of mine. I don't care about what people think, but I don't want, like, I do in a sense, right? To be completely transparent. And I think that was a flaw of mine that when I told you about this specific thing, is I would call people and I'm like, hey, Steven, how's it going? And blah, blah, blah. And then I'm like, oh, we had a great conversation. Well, did you move the
Right.
guy to the next stage of the process? Because he's
Exactly.
starting as a cold lead and you want him to invest. Did you move him down here or did you just dick around? Right. And there is
Yep.
something about relationship building. I will say that for sure. But at
Mm-hmm.
some point, like, hey, where is this guy at? And did we advance?
Right.
You see what I'm saying?
Yeah.
Or if
I
Steve,
do.
sorry, go ahead.
I do. That's why I'm asking that. And so, one of the things I think is really important, especially with friends and family, and especially as you go to more and more reach, like you were talking about, is trust. And how do you quote unquote build trust? Is trust built by direct, open, honest communication? Yes. But is it built over multiple touches? I could see that to be true
Absolutely.
as well. And I think there's also an it depends of where someone is at, right? And so what thoughts do you have on it, on building trust with investors that you didn't know to begin with, to them ultimately working with
Yeah,
you?
yeah. I mean, look, like, the guys who put the first $1 million check in the fund, I mean, they wrote $100,000 check and $50,000 checks in the first deal, and it was just building up trust. But these guys are wealthy guys. And so the other thing on that is, yeah, we had to build a relationship through like actually getting in a deal and seeing that, hey, we do report, we do communicate, we pick up the phone when you call, like we deliver, right? So that was building trust. But these guys, when you call these guys, they don't want to dick around. They got all kinds of stuff going on. They don't want to, bullshit around. It's like they know why you're calling, like most of the
Right.
time. They know why you're calling. And so they're like, yeah, they would rather you be more direct. Like the higher you go up to the level of
Yep.
people that you're speaking with, they would actually rather you be more direct. They just don't have the time for it.
That makes complete sense to me, right? Whenever I'm talking to executives, quick, outcome focused, what does it mean? What path we're going to take? It seems like it's the same kind of
Yeah.
thing, right? And so,
And I think one more thing on
um,
that is I think it needs to be, there's got to be a healthy balance. I think you can be like, you can definitely be too direct, in my opinion. You can be too passive, right? Not
yep,
wanting to like, what are you gonna shake up? Like, how mad you're not telling someone to F off. If you do that, then of course they're gonna get mad.
exactly.
Or they're just gonna be like, "What the hell? That's random." But I think
Yeah.
there's a middle ground, and you have to see who you're playing on. The guy who wrote a $3 million check into the fund, I'm not gonna be passive with this dude. I know this dude. He's gonna come in, he's
Hmm.
gonna boom, hit me with the questions, and I'll be like, "How much you gonna do?"
Cool.
Yeah,
Yeah. Yeah. What information do you need to move forward?
exactly.
That
And
kind of
that's
thing.
something for
Yeah.
your investor calls, dude. You know what I do on investor calls now? I'm
Hmm.
like, "Hey, Steven, I don't pitch." I'm like, "Hey, man, what do you wanna know?" Right? Because a lot of times they've
Right.
looked me up, they've looked at the deck, like, "What do you wanna know? What do you have
Hmm.
questions on?" Because I don't wanna pitch him, and think about it when someone pitches you and you just fog out, right?
Yeah. Yeah. Because if people are interested, they'll go be interested and look for things already. Everything is accessible out there, especially if you've made it accessible, right?
Exactly, exactly.
That story you were talking about, or really that growth curve, if you will, taking the action to go into the $20 million fund as this example and moving forward with that, did you have, was it much growth there, learning wise, from going to syndications to the fund as well? And I know you've already had built so much, and you're talking about doing the fund just like a year and some change ago, as an example. But did you see much difference in it, much learning going to a fund model?
I mean, there's definitely some things that I'm still learning, just as far as allocating funds and like just figuring out how to do things strategically. But I like it better because there's more freedom and flexibility. I mean, there's not that much of a learning curve. It's just really, it's not as much as you would think. I guess that there's more regulation and things. You have to do some more stuff with the SEC, but that's what your attorneys are for. Like your
Right.
attorneys handle that for you. And there's a little bit different of a strategy because we're still buying the same types of deals. But if we find a deal that's maybe it's a little more expensive, but it's in a great location and I know it's a great deal, it's just going to take me a little longer to get the rents up. It's easier for us to buy that into the fund, right? Because it's going
Mhm.
to blend into the other deals versus one on its own. Because I do think by the time you refinance or sell this deal that the returns are going to be big. You're just it's not going to get as much cash flow. So I do like that because there's deals that if you showed those numbers to an investor, I'm like, oh, I'm really not, the cash flow is going to be okay. But when we
Mhm.
sell, it's going to be great. Some investors don't like that, but you can buy those deals in the fund and everybody's happy because it's just a great asset, if that makes
Yeah.
sense.
Great asset, and the return is blended. And so the other things, other assets
On
compensate
the
for it
cash
too.
flow
So that
side,
the
on the cash
investor
flow
still
side,
gets
on
the
the
cash
equity
flow.
multiple side, that deal will probably help the equity multiple side.
Yeah. Yeah. Cool. You've talked about, I've heard you mention that you really think there's only about 10 years left in mobile home park space, but you also said that you're still looking at similar types of deals that you were before. Can you expand on this and kind of maybe reconcile these two pieces?
Yeah, look, I think that there's and maybe it's less than 10 years. It could be on the consolidation. Now, you're gonna be able to buy these very small parks, like 10 units for mom and pop, but they're going away. It's harder even now to find a 100-unit park that's owned by mom and pop. So, I
Yeah.
just think there's gonna be more consolidation. We're gonna be consolidating more. But, yeah, we're still looking for deals like we started with, value add deals. We're trying to find bigger deals, but there's still a lot of value in portfolio aggregation because Steven's private equity company is not going to buy a 50-unit park for 5 million bucks. Like they're just not.
Hmm.
But they'll buy 30 of those from you after you bought them and stabilized them. And so that's the thought process, or who knows, maybe we'll just keep it and become the private equity company. Which we
Right.
we are a private equity company, really, but I'm like become the institution, essentially.
Right. Do you think you ever go into different asset classes as well?
Yeah, look, I think so. I just yeah, absolutely. I mean, I think the short answer is yes, because I think there's value to be had in some other asset classes. The problem is I just know this one so well. I can go into a
Right.
mobile home park and I know immediately whether I want to buy it or not. I'm so confident in that, right? I don't have that with retail yet. I don't have that with industrial yet, right? You can build that, but I think the only way you can build that is like looking at a bunch of deals and actually buying some
Mhm.
and figuring out the business plan that works.
Right. So I'll ask it this way based on that, and absolutely kind of staying in the lane, mobile home parks. This is the experience we have. We have the operator knowledge. You have the certainty because of so much evidence of going to a park, knowing if you're going to buy it or not. There's a lot there, but you've also talked about decision and commitment into going into something else, right? Of course, that something else so far on this through line has been scale, doing the next thing and then the next thing. And so going into another asset class is a big shift, but it's also the next thing. So I would ask, what would you need to know in order to go into another asset class? Or what would need to happen? Maybe another question for you to even consider.
Yeah, yeah, I think, and I've looked at other asset classes. I just don't have the certainty yet, right? And so I think it would just be learning and picking one, right? I'm not going to pick, oh, we might buy a storage or an office building, retail or whatnot. It's, hey, I like this. There's something here where we can aggregate and roll up, right? There's some aspect of that. And I would just have to be super certain about the numbers and the underwriting. Because
Sure.
that's the other thing about raising money. If you're not certain about it, and I'd literally have all of my net worth or 97% of it in mobile home parks. I freaking believe in the asset class. Let's just call it what it is, right?
Yeah.
And so I wouldn't be able to invest in someone's retail deals because I don't know. It's probably
Right.
a good deal, but I got to have the certainty.
So you're talking about here that if you're looking at something else, you would have to, of course, see the opportunity, and the opportunity has to be big enough. You're always trading up to another opportunity. We all are, right? And so looking backwards, right, the climb here to get to the 40 plus parks that you're at now, what was the frame of mind when you're on that climb, on that way up? When did you start to move? When did the vision start to expand for you from let me get this one park to maybe we can do two or three or five to okay, where's the next big opportunity of instead of a couple syndications we've talked about on that growth curve to go to funds, but also again from that vision perspective, when did you start to see what the vision could be like? Because now it's we're trading up to the next big opportunity, which means next big
Yeah.
vision. So I'm curious, again, to expand on that for the listeners, because you didn't have this massive vision, or maybe you did, you haven't answered yet, when you first started, but it kind of came to you as you did the reps and as you started to see over the next horizon. I'm kind of curious what that journey was
Yeah,
like.
no, it's a great question. You're a great interviewer, by the way. You ask freaking great questions, Steven. So I'll give that to you.
Thank
So
you.
look, I would say like I always had a big target vision, but the way I look at it is so if you drew something, you're looking out and you're like your wide range, like your target is at the end, but you're sort of
Mhm.
blinded. You're like, man, I want to get to that big target, but you don't like, you just can't really, it's not real to you at that point, right?
Yeah.
And so in the beginning, it was just like, hey, I'm going to buy a couple parks. I'm going to figure out how to do them with my own money. Then I partnered with these guys and then we bought a couple other deals. I'm like, okay, shit, like we can just scale and then I can have 30 parks, right? Smaller percentage, but of a much bigger pie. And so I started to basically the light started to shine on dark spots at that point.
Mhm.
And this has actually happened to me recently where I'm like, man, like we finished this one. It's like I still have the same target that I had, right? It's just I've seen more light on how to get there. And hey, okay, actually we can do this and we can scale this. And oh wow, now the asset management company is actually worth like something, right? There's enterprise value
Yeah.
there now. And then so as you scale up, you're like, okay, wow, now I can see how this gets super, super big. And so it's almost like how I did it was sort of backwards. Like I just had a massive target and I was just always kind of shedding the light on how it's actually feasible to get there. The actual target I have is still huge from like a net worth
Mhm.
impact perspective. And I'm closer to seeing how it can happen, right? But there's still darkness. You see what I'm saying? Does that make sense or answer your question?
It does. So if I'm hearing what you're saying, it's you've always had big goals and you knew you're focusing on the what and of course why there and making and you had the commitment to take action, and so as you took more action, more how or light spots were revealed, which also probably made more of the what brighter, but you've kept that why the entire
Yeah.
time.
Yeah. And maybe it's grown and gotten even bigger from an impact perspective and whatnot. So that has grown, but generally it's the same target that I've had and I've been writing down for however many years. And it just continues to reveal itself. And so you think of this dumb target, right? Yeah, I actually want to do that. Why? Well, because I can make a huge impact, right? I can make a huge impact on the world at that point. And it's at that point, like when I was selling insurance, I'm like, damn, I need to get to 100 grand, right? First, 150 grand. And it's hard to even fathom the big target. It's hard to even fathom it at that point. But you're like, no, I'm going to get there. I'm going to get there. You'll definitely have your doubts, but you just got to go, right? What I was doing at that time. And I could look back and say, I was probably in insurance too long and I should have just, look, this is what this comes down to. It comes down to balls. Like how big's your pair? Seriously.
Yeah.
Because I know guys that started in this business and never did a syndication. They did a $20 million fund. First thing they did, right? Now they've scaled beyond that, right? So it's just how much you want to go, right? How much risk do you want to take, right?
Do you find that it really just comes back down to commitment?
Yeah. I mean, that's
How big is your
totally a
commitment?
lot of it. Totally a lot of it. Commitment. And I think just, being confident that you'll figure it out.
Yeah.
I mean, there's stuff right now that I'm like, okay, yeah, that would move us faster. But then I get, okay, like I don't know how to do that. But if I just go, you're still fighting some of the same stuff to a degree. It's just at a different level. It's, I was talking to somebody about this the other day. I was like, look, you're always going to have sort of financial problems, like whatever it is. It's just different. Like at one point, my problem was like, how am I going to pay my $350 rent this Friday? And then we had a problem that we needed $2 million for a deal that we needed to close the next day and didn't have it. Right. So we had to figure it out. So you're always, I think you're always going to have some financial problems. It's just, which one do you want? Right.
Yeah. Not to, placate or make it too cliche, but I do absolutely subscribe to it's all going to be hard. It's going to be hard to be poor. It's going to be hard to go raise capital. It's going to be hard to operate. It's going to be hard to whatever it is type of thing.
Yeah.
Right.
Yeah. I just had a $350 rent I couldn't pay. It was just, would go into a grocery store or a convenience store. Back, man, do I get the 20-ounce Red Bull or do I get the 8-ounce, man? What do I get? I'm like, man, there's going to be one day where I don't give a shit about the prices in the gas station store. Right.
Yeah. Derek, appreciated the conversation. I gotta let you go here soon, but I wanted to ask, based on that, what do you think I don't know how many years ago that was for you, 6, 7 years. What do you think that person would be most proud of what you've accomplished now?
I think they would just be like, wow, man, I knew you could do that. Right. I think they would just be proud that I actually did the things that I said I was going to do. I said I was going to stop partying so much and drinking so much and smoking cigars and cigarettes like I used to, like all this other stuff. Like it's all dumb stuff, right? Like it's just a waste, in my opinion.
Yeah.
It was like, hey, man, you were able to stop all the things that you said that you were going to stop. And you've built what you said that you were going to build. And I think that I've got a family, I've got 3 kids, I've got a beautiful wife and kids, and they would be proud of that as well, that I'm not just business centric. I take care of myself. I work out 6 or 7 times a week. I work out hard too. I don't walk, right? And so I think it's more of I feel like I'm in really good condition. And I think they would just be proud of that because I wasn't in any of those categories before.
Yeah. Awesome, man. I think that's so cool. That I know that sounds so basic, but it is really cool. And I know it feels like the pride in that and knowing the people around are proud of you too. So dude, you've been all over the place. I enjoyed your other podcasts, not only your mobile home park show, but some of the other places I've listened to as well. Best ever CRE show, best ever commercial real estate investing show. You've got, of course, the funds here. You're always looking for more capital for your investments so you can continue to scale, so you can continue to, doing more and more. Where would you like people to go learn more about some of those investments so that maybe if you do have a call with them, you could say, hey, what do you need to know?
Yeah, no, totally. Yeah, you can go check us out at victorycapital.com. That's VICKTORY capital.com. You can find me on social media, Derek Vickers. I post just about every day on every social media channel. And on iTunes, you can check out the MHP show. You can listen to me run my mouth on there about mobile home parks and anything else.
Awesome, man. Thank you so much
Yeah,
for being here,
thanks,
Derek.
Steven.
Appreciate it. Thanks for joining us on another episode of Path to Passive. We love connecting with our listeners and those on the path to architecting their wealth and improving their lives. Feel free to let us know what topics you'd like to see in the future episodes. Get in touch with us through email or Instagram. See you next week for a new episode.